Hi everybody, welcome to another one of my updates. So sorry it's been a little bit longer than you probably expected to go through and discuss the Jobkeeper scheme in more detail, but we had to really wait until the tax office and treasurer got their rules together. We all sort of know through my other video how it's going to work for employees, but we really weren't that I guess, confident on the detail regarding the eligibility for employers, i.e. really what the turnover provisions are going to be. So we've got some really good information. We spoke directly with the Treasurer and we've got some information regarding how we're going to work that, and the ATO has come out with some really good clarification and also with some information regarding various examples that you can probably will go through and you could probably use to look at in your own businesses. Now, this is a very high level recording. It's about the general detail. Again, please come and see us regarding your own circumstances. We've got so many tools and work papers to help you work out how the provisions will work for you, and we're more than happy to help. Hopefully, it's been, a month, 5 weeks since we really started to see the heavy press from government regarding the coronavirus handling. And obviously, over that period now, we've had at least a month worth of reduction in, in our business life, whether that means that we're affected by zero income, whether we're still going okay as we did before, whether we're making more, or somewhere in between. And I guess, the fact that you're probably watching this is that you're somewhere in between or being affected in a great deal regarding the virus impact and the stimulus measures. We need to know more about them. So we're here to help. We're here to cut through the red tape. Now, without further ado, I just want to let everybody know that you probably in your inboxes today have received an invitation to a webinar that we're going to hold on Tuesday night. Tuesday is going to be the day after the registration starts, and we're going to have at least a day worth of working out how it works for the registrations and if there's any teething problems. It's going to be an unbelievable webinar. It's going to basically cut through all the jargon and get to the nitty gritty of how it's going to work for you and how you're going to get your money, when, and the mechanism involved. Okay, so I urge you to register for that. There's only so many spots available, so first in, best dressed with that one. Unfortunately, we will have a recording hopefully to send out eventually, but please share that around to people that need help. It's a free webinar. We're doing all this stuff for free to help you guys out with these webinars and videos, but please, if you do need more help, come and engage us and speak to us in the office. We can really make a real hard problem probably be, rather than be insurmountable, be pretty palatable and able to help you with your business and get through to that other side. So what I want to do is, I don't want to go on speculation and stuff that you're hearing in the newspapers and things that you're hearing from commentators and so forth. I want you to be able to understand where all this is coming from, and that's why I've got on the board here, or on the screen here, an explanatory memorandum. So this is it. This is what everybody's looking at. So newspapers, TV, journalists, your next door neighbour, all that speculation you're hearing is all coming from this. The one that I did before this was more about the eligibility of the employees. I've got tools, and I showed you that last video. If you haven't seen it, go look at my prior video. This one here is more to do with the rules, and I'm going to skim over a little bit of stuff that's been discussed before, because I know that these things take a lot of time to go through, and you probably stop starting various videos. So without further ado, let's get into it. So this is an explanatory memorandum, or statement in this case. Talks to you about what the scheme is, what's the duration, when an employer is eligible for the payment. All right, so don't worry too much about reading the stuff. I'm here to tell you what it is. Okay, very important definition here. What is a JobKeeper fortnight? Okay, so a JobKeeper fortnight is the fortnight beginning on the 30th of March 2020, and each subsequent fortnight ending on the 27th of September. Okay, so that means it's going to be a 26-week period, and with obviously 13 fortnights in there. So there's going to be, we need to match our own payroll to meet this. Now, we don't have to go and change our payroll periods, but we need to understand that the ATO and the Commissioner aren't interested in what we do with our payroll. They're interested in us following what their guides are, right? So if we're on weekly, not going to be a problem because you're actually going to be ahead of the game. But monthlies, we're going to have to mesh that in somehow into ensuring that the employees get at least some of their money. So we've gone through here. So this is very important. So this is now, I'm going to focus on the employers, okay? So it's available only to an employer who qualifies for the scheme. So remembering, who cares right now about the employee's eligibility? That's not important. You know, your part-timers, your full-timers, your dates and your eligibility service periods, all these type of things, and stand-down orders, not important. Right now, we're going to work out, are we as an employer eligible for this scheme? So it satisfies the following requirements. Now, some of you are going to scratch your head because they might not be relevant. On the 1st of March 2020, it carried on a business in Australia, or was a not-for-profit business pursuing its objectives in Australia. And before the end of the fortnight that we're discussing, it met the decline in turnover test, which will go. All right. Things that it doesn't apply. So remember, you've got to be in business. So passive investors, I'm sorry, it doesn't apply to you. You know, you guys can potentially go and look at Jobseeker. That's going to be your benefit if your income has dropped so much. So you're not a bank, basically. You know, that banks are included. Government bodies aren't included. And remembering, if your business was going through a bit of stress before the coronavirus hit, you had appointed a liquidator or as a bankruptcy trustee somewhere there, then you're out as well. Okay. So let's have a look at some of the stuff. And this is the major one that I really want to focus on today, which is very, very difficult. It's not easy. And when you look at this sort of stuff and you start to now have a look at the rules and rule book, and you start to put that against, hey, this is what the Prime Minister said. I thought it was pretty much a given and it's pretty easy. And, you know, if you're suffering and all that sort of stuff, well, now here are the rules. And then on top of the rules, at the end of it are the police, the ATO, and the integrity measures saying, by the way, if we find out that you're doing this for the main purpose of obtaining Jobkeeper or a benefit, then we're going to potentially, you're going to be liable and we're going to throw the book at you. And it does have criminal penalties and jail time. So for those of you who are starting to think about cooking up some schemes, not that I would know anyone who'd probably want to do that, but there might be someone you've heard about the water cooler. This is very important for you to understand. And at the next webinar, we'll go through it in very big detail. Okay. So it's not a free for all. All right. The decline in turnover test needs to be satisfied before an entity becomes eligible. Okay. So you've got to do it before. Now, obviously, this Jobkeeper came into play on the 30th of March. And at 30th of March, even up, I think the legislation went through on the 8th or something like that. There was no detail regarding, it wasn't even legislation. So how could something start with legislation? Well, it did. And now it's been ratified and we got to get back. So if an entity does not qualify for the month of April 2020 because its turnover has not been sufficiently affected, it can test it later months. If the test is met, this allows entity that only becomes affected partway through its 6-month period of operation. You can then get it then, okay? Now, the good thing about this thing here is this provision here. It has to be satisfied at the end of a fortnight, but once an entity satisfies this test, it does not need to be retested and turn over in later months. So if you had a pretty shocking March or April, but then you know, you decided to, you know, you adjusted it was a big shock and you sent people home and eventually you're starting to get back on deck and working out how to do this working from home thing and whatever, and you're starting to creep up a bit and now you're not 30% under, you might be 20% under or basically break even. As long as you met the test in a test period, that's the only time you need to do that. There are issues regarding reporting, and we'll need to look at that in a second. But that's a very good thing. So it's not a month to month to month. It's you pass a period. It could be month or quarterly. Then you're home and hosed. Okay. So the basic. So there's two tests. First of all, we've got the basic test. The basic test and turnover works by comparing the projected GST turnover of the entity for the period with its current GST turnover is calculated for the relevant comparison period. This, in effect, compares a month or quarter in the period the Jobkeeper scheme applies with the corresponding 2019 period. For most businesses, this will be an appropriate comparison to identify if turnover has declined sufficiently. Okay, so pretty much you pick a period, and we'll go through which periods you can do in a second. And you need to look at the prior period in 2019, compare the two, and it's got to be compared on the same basis. And if the current period, which matches the prior period, is more than equal to or 30% lower than the 2019 period, then you're going to be eligible to be an eligible employer because of this turnover test. Okay. Now, there's another issue here where there's, again, larger businesses, and we're not going to worry about them. They want turnover 1 billion yearly turnover or more. Those clients that are over 1 billion talk to me directly. We're not going to worry about those ones today on this high-level review. So we don't need to. That one's a 50% test. Okay. There's also going to be an alternative test, which looks at different ways of testing for people that have a really lumpy incomes. For example, they might be agriculture and had a really bad 2019. And even though 2020 is pretty bad, it's not as bad as 19, so you're out, but you have suffered a reduction. Also for businesses that weren't around this time last year, they're only new starts. There's additional tests, and again, they haven't been tested yet, and there's going to be it's up to the Commission of Taxation to provide various tests. So if you're in that category, you need to get in touch with me or our team, and we can look at how that's going to work for you and how we can speak to the commissioner and prove to him or her, if it's an assistant commissioner, to get you into the JobKeeper, irrespective of the basic test not being met. Okay, so again, it talks about the fact that aggregated turnover is the same meaning as in the Tax Act. It's all basically to do with the GST laws as well. This next bit's all about charities. I'm not going to worry about that. So here is the stuff I really want to talk to you about. So the periods for the turnover tests being compared by any of the periods of one of the month or 3 months, where if it's a month you want to turn over, do the test, it's got to be either March, April, May, June, July, August, or September 2020. Okay? Or it can be a 3-month period of the quarter that starts in April, which I call the June 2020 quarter, or the September 2020 quarter. So you've got the and or, and this was what we had to work on, and because it ties into the activity statement, and we'll read that probably in the next paragraph, we were concerned that it wasn't very clear in this explanation whether a business that was reporting GST on a quarterly basis was still able to test on a monthly basis. So therefore, if you didn't meet the April, if you met it in April, let's say you're 30% lower than last April, but because you're on a GST quarterly, you had to wait till June. So we had to work out if that was the case. In the case, the Commissioner and the ATO has been quite clear now that it doesn't matter how you lodge your activity statements, quarterly or monthly, you can use a month or a quarter to test. So in this particular case, the other good thing about that is that it opens up March 2020. So, okay, March 2020, we had a normal probably first week of March, and then started to be catastrophe. Very quickly things got turned off and the scare, and so our March was not great. But in saying that, because we potentially had a good week and a half, if we were trending in a positive fashion, like a lot of the clients that I have are, then you probably haven't hit the 30% downturn on March. But it doesn't mean that you can't. Like my hospitality clients that aren't doing takeaway literally went cold turkey and stopped altogether, in March. So they don't have a problem with meeting the March turnover. So the beauty of this is you don't have to worry about April. We can look at testing March. And I've got some tools in a second to show you. So excuse me. Accordingly, for example, a business can make a comparison by comparing the whole month of March with March 19, or by comparing the quarter beginning April 2020 with the quarter beginning April 19. These periods, with the reporting periods which align, which the GST registered business will submit the GST returns. And that was the concern that I had. I wasn't sure at that point, and a lot of other people, colleagues, weren't sure as well. So GST projected and current turnover is important to work out what is that turnover. Okay, so we've got GST turnover is all your taxable suppliers. Now, very important that we look at this next bit, because a lot of you guys won't potentially, let's say, get through on the March. Okay, some of you will, some of you won't. So we need to look at this thing called projected GST turnover. So here we are today, I'm recording this on the 17th of April. So we're over halfway through April. So how can we say that we want to be able to pay our employees this JobKeeper, but we don't know what we're going to be doing in April, till the end of April, but we need to backdate, and I'll show you this in a second, some wages. So we can use this projected GST turnover, but you need to have it needs to be based upon a reasonable expectation, okay? You know, so we're talking about you need to have evidence of, okay, well, the first 2 weeks of April were 50% less than the first 2 weeks of April in March, and we believe, based upon that expectation, we believe we've got a reasonable expectation that our April won't be anywhere near, or at least 50% to 30% lower than last year. But you have to have some figures there. If you're trending that your April 2 weeks is actually higher than that, you're actually right now, if you doubled your turnover from the first 2 weeks of April, you'd be under that 30%. So you'd be only 20% under. Then you have to have some other ways of convincing the ATO that you think that you're going to be under. That might mean that you had some very good work in progress in the start of April that you build out, that was to do with work that you started prior to the coronavirus pandemic hitting. So we've got to work on that. So please, I'm not going to go in extra extent on this part, but I want you to understand that it's a massive area and something that the ATO is going to be looking very, very carefully. When you tick that box saying that you're going to get JobKeeper because of this particular reduction and you don't have evidence, they will be calling on evidence. And if you don't, you'll be having to pay it back with penalties, with interest. And depending on if they think you cooked up a scheme, it could even be worse. So just be careful. All right, so here we go. Let's just jump straight into this example. So we have an example here. Burke Industries accesses its eligibility for JobKeeper payments on the 11th of May 2020, based upon a projected GST turnover of May of 10 million. The corresponding period is May 19, obviously, for which it had a current GST turnover of $20 million. The alternative turnover test does not apply, as the month of May is an appropriate relevant comparison period. So there was a period and it wasn't affected back then, and the business did have a turnover in that month. So the May 2020 turnover falls short of the May turnover by 10 million, which is 50% of April 19. It meets the percentage of 30%, and it's happy days, it's in, okay? So if we have a look at here, like I said before, alternative tests is when you didn't have an accurate turnover test of the prior year, or it didn't exist the prior year, and the commissioner can either decline it or give you another different test. Let's have a look at New Earn Industries. Accesses eligibility for job payments on 3rd of July, based upon projected GST turnover for the quarter beginning of July. So the whole quarter we're looking at here. So it's saying that it thinks that the quarter of July, so September 2020 quarter, is going to be 80 million. The September 2019 quarter had 100 million. So the turnover test doesn't apply because we had relevant data already. So the July 2020 quarter, which I call the actual September quarter, is actually only it's actually below by 20%. So it doesn't meet the test. Okay. This next test gives you a bit of the alternative test. It talks about a farm where, you know, there's no corresponding there's no corresponding period in the prior year that's going to give you a result. So again, you pause the video, read the example if you're interested in that one. This one here is a good one to go through. So SebTech is a startup technology company, began current business in October. So there is no March 19, there is no June 19. Selling its product. Despite strong sales, its sales declined substantially from March 2020. It accessed eligibility for Jobkeeper payments on the 15th of April based upon a projected GST turnover of $15,000 for that period. Okay, but because it doesn't have an April 2019, we have to use the alternative test. So the commission in this case determines that the alternative test under which this is going to be compared against is the average of the actual GST turnover in all of the months when the business was carrying on. So from October to March, the average turnover was 30,000. Now now our current turnover that we're projecting for April is 50% lower than that average, so it's going to get it. Okay, so there is some exceptions to the basic test, and that's the alternative test. But again, there's no hard line on there. It's pretty much we've got to work with you and the commissioner to work out how we're going to work that out. All right. So the next part of this video talks to us about the eligible employee. Now, I've gone through this with you in the prior video about eligible employees. Nothing's really changed in that area. Everything's pretty much the same. Doesn't really change. So have a look at my prior video. But again, on the Tuesday night big webinar, I'll be going through the whole lot. So I'll be going through what we just went through then, but in a more practical sense, let's say, and also going through the eligible employee, and we'll also be going through how to apply, what do you got to do, when you got to get the money, and we're also going to have a special guest from Xero who's going to show us how to even put it through the accounting software. Okay, so what I've done here is this report called, it's a Jobkeeper report. And what we've done here is had a look at, let's look at it from the right to the left, okay? So the right-hand side here, we have the Jobkeeper eligible income. So we've got March 2019 turnover. And so I guess we can look at this bottom one here because that includes all the other income. And we've got the current and the March that just finished, and we've got the difference between the two. So it's a negative 7.83%. We're down on the prior year, so we're not eligible in that test period. So the next period we're going to look at is the month of April. As I said, that you can use that month of April. So we have a look at the moment we're only on the 17th of April. So last April, the full month of April, was $36,000, okay? Currently, in the current April period to date, and everything's been reconciled in these accounts, we're up to $12,720. So what 64%, sorry, of reduction, okay? So the beauty of that is that we've got a tracking now that we can look at, which means that we've got the 2 weeks that's still got to go, let's say. I've got also here, I've got a eligible turnover. So once we hit this turnover for April, we'll be out for that month of testing month. So at the moment, as you can see, we are currently more than 30% down, but we've still got a couple of weeks of April to go. All right, so then we look, okay, if we think that when we don't have enough data to say that, yeah, you know what, I reckon we'll be over, because if we double that, we get to 24,000, and we're almost at the limit. Well, actually, a bit more than 24,000. We'll be over the limit. So can we justify that? Now, if we have a look at April to June, so the June quarter of the last financial year, 19, we turned over $135,000. Obviously, we're only in the first 2 weeks of a 12-week period, but we're only at $12,000. It looks to me that if you average that out, we've done a lot of, we've did a big June 19, so we might not have a big June 19. So based upon that, if you were to do the mathematics, we're probably, even if you use a straight line basis, we're not going to hit $95,000 more income, which is our 30% reduction on the prior year. Or we could. We just got to have a look at where we are. Now, we can use a straight line method. We can use other methods regarding, looking at cancel sales, the fact that we've got not many employees working or whatever it might be. But this is a particular report that we could produce for you guys, and we can have that discussion. Just be careful that we're applying and we're doing this in the right way, and we've got enough evidence to do that. Okay, so all in all, this was a very high level video to give you some information about how you guys are going to be eligible. Remember, you guys will be eligible first. Forget about the whole idea of getting the turnover tests passed. You've got to first get through that. Then you've got to look at the employees and see whether the employees are going to be eligible. And then you can start applying and going to the next step, which is the application forms, the forms you've got to send the employees. So I can't stress enough that look at your own business and how that's going to be structured. Now, the other thing to talk about as well, and we're going to be talking more about this on our next, on the webinar on Tuesday night, is for your self-employed people who don't have wages, people operating as sole traders, people operating through trusts that don't have employees, or owners that don't pay themselves a wage. They are all potentially eligible. But again, first, don't go and start writing your checks out. You got to look at the fact that have you suffered in turnover by a greater than 30% reduction? Okay, for those clients, obviously they're turning over under $1 billion a year. So they're the important parts. All right. So I can't stress enough. Register for that webinar. We'll go through it in detail. There'll be question and answers. It'll be live, so you can grill me as many questions as you want going through that. But important to watch this video, find out how it's going to apply to you. I've got heaps of tools that we can plug in and play and see how we're going and whether you can get these subsidies. It's going to make a massive difference to your bottom line if you can get yourself some of this stimulus. But remembering, it's only for people who deserve and can utilise it because they've suffered. So people out there cooking schemes, please be careful when you're hearing people doing that. Other commentators, I've gone through the legislation the way it is today. So that's basically it. That's what we're working with. So a lot of the noise you're hearing out there, please keep it as noise. If you have any questions, don't hesitate to call the office and speak to our professional staff here. We'll put you in the right direction and we'll help guide you through this uncertainty. We're all in this together, guys. We've got no reason to hide our intellectual property. We want everyone to go through this. We are triaging clients and businesses every single day. And we've had some fantastic stories that people have been able to get through based upon this. We've had some better feedback from banks lately. It's all starting to get to where the government intends it to be, but you need to act. You need to get information. You need to get professional information and not be a statistic at the end of it who, A, doesn't get what they're entitled to, or B, applies for something they're not entitled to and basically has a big problem down the track. So have an awesome weekend. I hope to see you all on our live chat and webinar on Tuesday night. If you haven't got the email, please contact me, contact the office, get one. Invite your friends and make sure that this weekend you look after your family, make well use of your time, catch up on stuff, catch up on sleep if you have to, but also look out for your neighbour in need. Make sure that everybody is looked after in this place. Social distance. Let's get past this medical problem first and get back into our businesses and grow them going forward. Good to speak to you again, and I'll see you very soon. Thanks a lot, guys.